Let's get to our ETF Spotlight. Bob Pisani on the floor looking at ETF and mutual fund outflows. Hey, Bob.
Hello there, Carl. There's a lot of interest in watching fund flows these days with all the volatility. So there's good and bad news for trends this year. First, let me show you some of the December estimates. Obviously, December is not over. We don't have the full numbers here. But through last week, not this week, but through last week, the mutual funds are continuing to see outflows, $117 billion for this month, and ETFs are continuing to see inflows. Now, this has really been the trend all year long. For 2018, for example, mutual funds have seen outflows of north of $300 billion, but ETFs have seen inflows of $305 billion. Again, this is not full year, but close to December, while assets under management has been fairly stagnant this year at about $3.4 trillion or so. Now, there's good news and bad news about all these fund flows. You have to be careful about interpreting this. The good news is, first, ETFs continue to see inflows, and a good part of that is due to outflows from mutual funds, all right? That's benefiting the ETF business. The bad news is that the rate of growth in ETF inflows is 40% lower than it was last year. Well, that's definitely a slowdown. Outflows do continue from mutual funds, I would note that, and given the decline in asset values for assets under management for ETFs, we've not really seen any growth this year in assets under management, not significant, not what we've seen in the last few years. The other bad news is total amount of outflows from mutual funds are larger than inflows into ETFs. What does that mean? Well, it means that people are continuing to take money out of mutual funds. Some of that money is flowing into ETFs, but some of it obviously is not. Obviously, some people are keeping money in cash or finding other uses for that. The other thing I think is very important here, guys and Morgan, is we are continuing to see the fee wars, lowering fees for ETFs. That's benefiting consumers. They're getting lower priced ETFs. On the other hand, it's putting a lot of pressure on the financial industry. It's getting more difficult, of course, to manage this kind of money when the fees keep dropping. That's why you see all these robo-advisors that are out there. So I anticipate you'll hear more pressure from these fund managers out there who are trying to figure out ways to advise their clients, keep a business running, and still charge very, very small fees.